Hello and welcome to Wisdom Workshop. Today the video we'll be discussing is about the current situation of the world we live in right now. So if you really want to see more videos like this, please like the video and subscribe with all notifications turned on. Whether you're now anxious about your career, your business, or anything else, what does the future hold for you? This is arguably the most crucial advice we can give you. Since most individuals only follow the stock market, they're mostly unaware of the costs of homes in their area, which is unacceptable. So how do we break down the confusion about this situation for the future? I want to emphasize, and I'll explain in a moment, but what I really want to emphasize to the spectator is that you can just begin to comprehend the macroeconomic picture, and it doesn't have to be complicated. We think it's complicated because economic experts and scholars use jargon and technical phrases, but if you simply break it down into basic English, it's actually extremely easy for people to comprehend, and if they comprehend it, they'll be able to make much better financial decisions for themselves and their families in the future. So whether it's me or someone else, make an effort to pay attention to what's going on. So let's say you've been preserving your wealth, constantly working and doing all the correct things, and you go to the bank and you see that you're only being paid 0.5 interest or 0 interest or who knows what it is. So you say, okay, where can I go to obtain a somewhat greater rate of return while still being safe? You may choose a product such as a money market mutual fund or a money market fund and think, well, that's safe, all my friends are doing it, it's just like a savings account, but I get perhaps a 1.5% yield. However, the ordinary consumer is unaware that they're assuming tenfold more risk in order to obtain that 1% more yield. How is this possible? Because the money market mutual fund earns an additional return by investing your hard-earned earnings and cash in the repo market or the commercial paper market, which is effectively financing for firms of a similar type. So the issue then becomes, does that individual really want to lend their hard-earned funds to Dutch Bank or HSBC? You know, with the 2 kids, the white picket fence, and the golden retriever, they don't care about what's going on with the plumbing, they don't care about the dollar swaps. You know, some of these financial institutions that may be collapsing as we speak, or to put it in another way, more America-centric company terms, would that individual want their money being lent to American Airlines or Boeing right now, where every time you turn on CNN or the television, you see that they're asking for another bailout because they're about to go bankrupt? That is how this macro works, and how cash flow and plumbing are only 2 examples of how it may affect the average person. So what does it mean if our banks are going bankrupt right now? I mean, it's not just the banks though. It's the government, it's the private industry, it's our entire economy because debt periods last 75 to 100 years, and we're at the peak of a 75 to 100 year long-term debt phase. When you get to the peak of one of these debt cycles, the only thing the government can do is pick frugality, which very few administrations do. And that is just tightening the belt and spending less. Think of the deflationary depression we had in the 1930s. Most governments prefer money printing. This is causing inflation in order to bail out everyone who's in debt, whether it be governments or individuals. So if you reach a certain amount of debt, you don't have to pay it off, but most governments opt to inflate it anyway. So what does it mean for the ordinary person? Well, if the government is going to try to generate inflation, which means that the cost of products and services will rise, you want to make sure that you're prepared for that. As an example, if you only own your own house, you must have a 30-year fixed rate mortgage because if they try to generate inflation by raising interest rates, your interest rate will rise unless it is locked. And what happens if you're a debtor and they produce inflation? You'll be able to pay back your home loan with cheaper depreciated dollars. So they may look about it this way. If they borrow $100,000, the rate of interest implies that they're paying the bank back with more buying power because you've got capital plus interest. Inflation, on the other hand, permits the borrower to repay the loan with less buying power. So if your interest rate is, say, 1% or 3%, but inflation is 6%, the difference between the two represents a transfer of buying power from the bank to the individual homeowner. And I believe a lot of people hearing this probably have a mortgage, if not on a rental property, on their own house. One of the other things you could also do is to invest in gold, silver, and Bitcoin. But again, this is all up to your discretion. Because the recent pandemic changed everything, what do the numbers look like? From an economic sense, I believe the typical individual only needs to look at the entire economy as supply and demand. So the supply is how much things we generate in terms of products and services. Demand is how much money we have, our desire to buy things, and our access to credit. Previously being in a lockdown, there's a lot less need and a lot less products and services that are really consumed. That reduces the demand equation, which is what most people are intensely focused on. So they believe, alright, we'll simply need to see prices going down, which is deflation, but they forget about the supply side of the equation because if individuals can't leave and produce products and services, supply will go down quickly as well. So the question is whether demand or supply is declining faster. Then you look at the supply chains that have been interrupted going into the United States. If you go to Walmart, Target, or Home Depot, you'll see that the bulk of what you see on the aisles were manufactured outside of the United States. As a result, if those supply routes are interrupted, there will be less supply. Going back to Dalio's example of long-term debt cycles, what normally occurs is societal instability, and I regret having to say it, but that's simply the truth of the situation if you look at history. Typically, politicians deal with civil discontent by using helicopter money. So whether you name it modern monetary theory or universal basic income, it's simply the government pouring money into the actual economy and getting it into the back pockets of everyday citizens. We could see a situation in the future where the Federal Reserve System does it, and they're not officially permitted to do so at this time, but they have been breaching all of the restrictions. So if the ordinary person has more money in their pocket, that means there's a greater demand even if they're sitting at home not working for those things and services in the market. Many people believe that deflation and inflation are binary, that they're either one or the other, but they're not. So if there's less debt in the economy, asset values might fall, or via automobiles, anything that most people buy with loan, the prices of those go down. But anything people buy or most products and services people buy on a daily basis that don't require debt, such as food, the costs normally rise. In several marketplaces throughout the United States, food costs are up as much as 25%, and it's starting to happen in real time as we speak. Meatpacking industries have closed down because of COVID, and as a result, there are currently meat shortages, which is an excellent illustration of supply dropping faster than demand. But what's occurring is that the Federal Reserve System is injecting trillions into the economy. So you have a declining supply and more liquidity, which is why the shelves for pig and beef are unoccupied. When individuals starve or can't purchase groceries anymore, then the social situation will truly deteriorate. Thank you so much for watching this video. Please do subscribe with all notifications turned on and like this video if you learned how to deal with the economic crisis we're facing today.